Yo, what's good YouTube? Me back again with another video for y'all. Just a breakdown of the trade this morning, plus I'm going to explain the footprint charts to you a little bit. So just looking at this trade this morning, what did I see? So on the daily time frame, as we're always starting off, overall we're bearish, okay, but what happened yesterday? What happened was we swept out the previous day's low and then we closed bullish, giving us an EBP pattern, okay? So this is a strong bullish signal where the next day you can expect an expansion, okay? Into this daily bearish fair value gap is where I wanted to see price enter into. So then scaling on to the 15 minute, I entered after seeing, that's probably better on the 5 minute. Once we got this change in the state of delivery on Asia session, I then said to myself, price should not come back down to here, okay? Then all I did was confirm it on the footprint, a little long setup here, and we are running the trade. Alright, so that was the trade this morning, but my main focus here today is explaining the footprint to you all, and you might see a trade live here. So let's bring this into action and go over the footprint chart. So my main strategy trading the footprint, as you all know, is delta traps. Okay, I like to find a trap traders and then enter on the opposite way. Okay, every good reversal that you see in the market will come because of that. It's just standard, it's what happens in the market, and it's how you catch good reversals. You always want to have traders trapped, traders losing money as prices going against them. Okay, so let's go on to crude, and we will just go over from where I entered this morning. So as we've got our new day here, this is Asia, okay? As we can see, we get a trap down here at Asia, and then we see buyers stepping in, okay? We see a bullish imbalance at the lows, and then we start pushing higher. And then what happens is we keep seeing buyers at the highs of the candles, aggressive buyers are stepping in. When I came to the chart this morning, what did I see was a pullback here, we get trap sellers again, then we close bullish the next candle, and then what happens is we start trading with aggressive buyers entering the market, and ever since we have just been trading higher and higher, okay? Again, we got another trap here, it's a continuation signature. So once you get an expansion, if you want to get in on a retracement, all you do is wait for a pullback, catch traps at the lows again, and then once you see the buyer step back in, that can be your sign to get back involved in the trade. Alright, looking at this trade right now, this is going to be a potential trade for me on GBP USD to take it short. Alright, so I'm in a key area right now. What has happened is we have traded into the key area, and we've got trap buyers sitting in there. So as you can see, within that you've got buyers getting trapped here and buyers getting trapped here. Once this candle closes bearish, you can start to see aggressive selling coming in now. Alright, so once this candle closes, hopefully we get a delta divergence as well, where the candle overall is bullish on the delta, but the candle closes bearish. Okay, so if it is a bullish candle, you would expect to see price going higher if the delta is strong. Okay, so if it's a bullish delta, you would expect the candle to be bullish. Once you get a cracking correlation, that can indicate that there's going to be a reversal to trade it lower. Okay, we also have a bearish imbalance sitting in here, so you can see the aggression in the sellers is starting to come ahead. That is all I look for, and where would I look to target? This low down here. Okay, so this is low is a block order. So if you look at auction market theory and think about it, the market is a vertical auction. Once price hits this area, that proves that there's still sellers willing to sell price down here, okay, with the 109 contracts right at the very low. Okay, so there's a good chance that price is going to come all the way back down there and take out this low. You want to see basically no more buyers or sellers sitting at the highs of the candles. If you believe it's going to be a swing point, you want to see as close to zero as possible. But when I'm trading crude, I like to crude or GBP, as long as the sell side is the buy side is under 100. Okay, so it's at 65 contracts, and now that's pretty small. Okay, compared to when you look down here over 100. All right, on the selling side. So whenever you see that, it's an indication that price wants to continue lower. Okay, because there's still sellers willing to sell price as it goes lower. Okay, and then you see the highs of the candle is mostly under 100 because there's no more buyers willing to buy the highs. So that's what you call a clean high and a dirty low. Alright, so that is exactly what I look for within that. Again, you'll probably see me taking a short here in 1 second once this candle closes bearish. okay, because that's me then got confirmation that we've got the trap at the highs, we've got aggressive sellers coming into the market, and we've got a bearish imbalance. Alright, so we are potentially going to see a short setup here, but that's all I use within this strategy. Okay, I like to use on the actual chart itself. One second. On the chart itself, I like to see the trap. Alright, I like to hit it at the key area. So if we look at GBP right now, we've taken out this high, which is here. I don't know if you'll be able to see it. So this high has been swept, and all I'm looking for is a continuation trade lower. Alright, I think this low is going to go because it's got a dirty low at it. Okay, so that is all I'm looking for. I believe that this is probably the high. I don't expect it to go much higher. It's a Friday, so I would expect it to trade down into this weekly fair value gap a little bit more and close the week off bearish. So that is a trade for this morning that I'm about to take, and that is how I trade on the footprint. So I find a key area, which is usually a higher or low, or you can use a fair value gap, but mostly it's a higher low, and then I'll just confirm it with my bias, which is the daily, and then I'll look on the footprint chart to then confirm that there's a trap within the high. You don't actually need footprint as well though. All you need to do is look at the wick. See that wick stinging up and immediately closing back down? That wick itself shows the trap, but it's just good to confirm it on the footprint chart to give you a bit more confidence. And then we're about to have a change in the state of delivery. Okay, so that is the system that I'm using. That's the trade that I'm about to take. What I'll do is I'll probably take it if this closes within the next couple of minutes. We've just opened a new hourly candle, and if we have a look, we closed inside the previous candle. So if we get a change in the state of delivery here, it's a good signal for me to take it short. But again, we're always confirming it on the footprint chart. So if anyone's interested in getting involved in the footprint, understanding it a bit more, please give me a message or write a comment, and I'll be sure to help you out. I can help you get set up with the footprint that I use, the template that I use. This is a personal template that I've made myself. It just helps me spot the traps a bit better. But yeah, apart from that, everyone have a good weekend, and I hope you've enjoyed the videos that I've been posting this week. I'll see you in a bit.